Hey guys, welcome back to another video. Today we'll be doing an analysis on PayPal holdings. So starting out with the overview, I want to take a look at their PE ratio. So it's currently at a 45.23, which is not too good because the goal is to look for companies with a PE ratio of about 20 or less. This is something important to look at because it shows you how risky the investment will be. As of right now, they're not offering any dividends, which is perfectly fine. It just seems like they'd rather reinvest the money back into the company. Moving into the income statement now, let's take a look at their revenue. So as of the most recent year, they're bringing in 21.43 billion, which is up about 11 billion from when it was at 10.72 billion 5 years ago. So this is a big increase of about 100%. Next thing to look at is the net income. So over the past 5 years, it's been consistently growing, and this is great to see. The last thing to look at on the income statement is the shares outstanding. So this is something you want to see decrease. The more it goes up, the less your shares are worth. So as you can see, it's been slowly going down little by little over the past couple years. This is good to see as it's currently down 40 million. Moving into their balance sheet now, let's look at their current assets and their current liabilities. So their current assets are looking good as they've grown to 51 billion, which is an increase of 98% from 5 years ago. They've been making consistent large jumps with this, so we'll hope to see this continue to increase over the next couple of years. Now, looking at their current liabilities, they currently are standing at 38.45 billion. So this is an increase of 128%, which is a larger increase than what the current assets had. So overall, though, they have 12.5 billion more in current assets than current liabilities. So it's nothing to worry about as of right now. So hopefully we can see this grow at a slower rate in the near future. The last and one of the most important aspects to look at in any company is the free cash flow. So cash flow is important because companies that have a lot of money on hand have the advantage of being able to pay off any debt, invest into future growth, or pay dividends. So this is clearly something you need to see be improved on year after year. As you can see, it's looking kind of choppy. It's good to see that it's positive right now, but it's not good to see that it isn't consistent. It has basically doubled from 5 years ago, which is a great sign to see, but I don't like how they dipped every other year. In conclusion, PayPal has some good looking financials. Some criticism I want to give is I want to see them start buying back shares at a higher rate. I also don't like the big jump they had in the most recent year in current liabilities. Other than that, I like what I'm seeing from the company. As for when to buy, I would say right now, as it's been falling pretty rapidly over the past couple months. I'd probably buy a little bit every week or so as it continues to keep dropping. This will allow for you to potentially have a really good average price with the shares that you bought. Two things I want to mention before I end the video is my trading strategy is centered around finding value in a company. If I don't see consistent growth in most or all the categories I cover, then I tend to stay away. Secondly, I also want to point out that I am not a financial advisor. I am just a guy speaking my opinion on stuff on YouTube, so I highly recommend doing more research before coming to the conclusion of buying or selling any stock that I talk about. If you guys have any companies you want me to take a look at, feel free to comment them down below. Otherwise, thank you guys for watching and have a nice day.